topic that I'm going to talk is a well-known topic but rarely discussed, life insurance. And instead of saying life insurance, I would say it's protection planning for family. Protection, how we can use this protection in various stages of life. It could be basic protection to protect our family in case something happens. It could be having a protection plan for our existing assets, be it real estate, be it 401k, be it anything, right? So we can use life insurance for various needs, right? So let's talk about some examples. I created some simple examples which will help us correlate with our real scenarios. So I think the team is working to get the presentation. Right, so we see like this life insurance as like regular insurance which is only available when we are not available. I mean, when something happens to us. Let's say if I am here, the common perception is life insurance is only helpful when the person is not alive. That's wrong. Gone are the days where life insurance is only helpful when we are not alive. There is something, life insurance helps in case even we are still alive, it will still help. Like for example, there is something called living benefits, where if a person gets, let's say, cancer, terminal illness, heart stroke, it could be anything. There are few cases which are called as terminal illness, chronic illness, and critical illness. In these situations also life insurance can help. How can it help? Of course, we all have medical insurances, but if we come across into that situation, our medical insurance will only help for up to some extent. But after that, if by any, God forbid, it will never happen, but in case it happens, if you were referred to long-term care or some other facility where the medical expenses are going higher and higher, you know what happens? They have to use our assets, they have to use our IRAs, they have to use our 401ks to fund our medical expenses. We don't want that to happen, right? We want our children to enjoy whatever we gain through our hard-working life. So in those cases also, life insurance comes into play. So the companies, they will give you a lump sum amount. Let's say if you're taking $1 million coverage, by just paying $70 per month for a 40-year-old male, if he gets $1 million coverage, if something like that happens, the company is ready to pay like $800K lump sum amount. That can be funded for his own medical needs. I've seen real cases where a person got some terminal illness like cancer. She went through this phase and then she used this money to like come out of that cancer, and she used that money for her retirement, the remaining money for her retirement. So there are many use cases that life insurance can help, but we all see only as one way. If something happens to us, that is the only way. No, there are many ways that we can design these solutions. Okay? Gone are the days where life insurance is only for the people who face risk in their life. Even for the living benefits also, we should have some coverage. So this is what we are. So we are from SVBK Financial, and this is our mission. We provide all these solutions, but today we are only talking about the basic protection plan. First of all, I would like to start by congratulating Team India. I know we all went through this World Cup last night. I was also awake since until the whole night, and then woke up early, but in the morning after seeing that thing. But we should congratulate Team India, because throughout the tournament they gave us very good records. They entertained us very well. It's just a bad day, that's it. Okay. So like I was talking, we have like various solutions: family protection, protection with cash back. There are plans where you pay some money. Let's say you live up to 65 or 70, and right away after that, if you are still living, the money will come back. This is called cashback option. And we have life insurance DIRP. We'll talk about it later. College funding, we have some brochures over there. I think some of the people, they have collected the brochures. We are out of brochures, but we can send you a soft copy, but we can meet in person also to design the college plans for your children. And retirement solutions and health insurance. Okay. I'll take a simple example. Okay. So just take a look at this. So Muscat is having just for correlation. So how many of you can correlate with this example, right? We have some debts. He's having 150k income and outstanding mortgage of 550k, and he's having 2 kids, 400k college funding. How many of you can correlate? Masquerade, I didn't say. Okay. So first thing, total number which cannot be dropped for the next 20 years, no matter what. Do you know how I got this number? You want the formula? Do you know how I got this number? 20 years, right? 15 times 2 is 3 million. And then add the remaining numbers. 4 million. So, he's looking for 20 years of protection. This 4 million cannot be dropped. We don't want the family to sell off their house, right? It needs to be paid off. The person wants his family to enjoy the house that he built. So that's why it's 4 million. And employer is offering 1.5 million coverage. We all think that, okay, I'm working with a good company, I'm getting good coverage. Good. That is good. We go for extra coverage, of course. The group insurance will give you for less money, you get good coverage. But what if something happens to the employment? If we leave the company or company leaves us, that coverage is gone right away. Agree? Suppose if that happens at the age of 55, can you get coverage outside the work? At 55, there's no guarantee that you will get the coverage, or you may have to pay $500 for 1 million. We never know. He might be having some medical conditions because of which he may not get any coverage from outside. So our recommendation is to have some basic coverage outside the work, not depending directly on the work. So the gap that he's having is 3.5 million. Right? Now let's see. So for a sample, this is a sample for a 40-year-old male for the next 20 years, $69 is the price he needs to pay. We all pay insurance for various things, right? If anybody had got Tesla car recently, you might be paying $150 or $200. For a $50,000 car, without having insurance, we don't even take the car outside. But a family is dependent on us, right? So we should make sure we have enough protection. And like I said, this is not only for the people who are, it's not only for the, we should not see it as a plan which only covers when the person is not alive. So even when he's living, there is something called critical, chronic, and terminal illness, which the plan also covers, like I just explained earlier. And some of the lump sum amounts that the company will pay, depending on the situations, right? And this is the QR code. If you scan this code and give all the details, it will generate a beautiful report. So it's one of the North American company. They have this beautiful link which will generate a beautiful report for you. Please go ahead and take a picture and fill out slowly. It's very important. Whether you buy it or not, just scan it, see your numbers, and see how much you might need. Let's see another example. Zuckerberg Rao. So he's looking for principal protection without compromising on growth, inflation risk mitigation, longevity risk mitigation for the self and spouse, right? And here is the situation. He worked for a company for 15 plus years, accumulated 401k with 200k worth. And 3 years back, switched to a new employer. Lately realized his IRA money dropped because of the market crash. And his 200k became 175k. What is the solution? We have something called indexed annuity, where the money grows with the market, and whenever there is a market crash, the money will stay there. It will not go down. So hope this adds some value. This is one option that we have. This is also, by the way, indexed annuity is also the same concept, where the money will grow without any risk from the market. Market crashes, the money will not go negative. It will only go higher. And if you see on a last 20-30 year stock market graph, we all know we love to play risk, right? So red graph is a stock. So if you given an option, where do you want to invest? On the red one, on the blue one, or on the green one? Which one? Right? No answer? Which one you want to go for? Green, right? That's what we're recommending. Green is the index strategy, which I was telling, right? Whenever there's a crash, we all think, of course, Tesla is giving good returns, many stock market is giving good returns, of course. What if at the age of 60, the market is crashed, it's staying there for 5 years to recover? What is plan B? Index strategy. You can diversify. We're not saying that stock market is bad. We cannot. I mean, we all have to invest somewhere, but this is like a diversification. So you can diversify, secure some of your existing investments, so that if something like this happens, you have plan B. And let's see another example. And this guy is smart. He protected his family with additional 2 million from outside for next another 20 years. He rolled over his IRA to index strategy, good. And his current investment portfolio looks like this. Again, we're not downplaying any investments here. This is just to show an example of how we can diversify. Okay, everything is good, everything is important. We have to have money in all baskets, not in one basket. So he's having 401k, stocks, real estate, and all of them have market risk and tax risk. And he's smart. He understood about Roth IRA. He also kept in Roth IRA, which doesn't have any tax risk, but still have market risk. So what is something which doesn't have a market risk and a tax risk? That is the same thing, index universal life. So this is another strategy, another bucket. We are not saying other investments are bad. We are only saying that use this as a diversification. Just diversify some of your funds into this, which can help in all the things that we just explained earlier. This is an insurance product. It will also give you critical benefits if in case something like that happens, right? In some states, I think in Washington, I believe, they're already taking extra money out of the paycheck for long-term care. So it's going to be big. When we grow to 60, 65, long-term care is going to be big. And last example, hopefully, so he's looking for a flexible plan to fulfill any of the below needs, to fund the college, marriage, gift for the kids, and Head Start fund for their children. And he wants to leave a big legacy, right? And he can use this strategy to do all this. And we have a stall there, so please give us your details. We can work with you. We'll give you all the information. By the way, there is no obligation to buy anything. We are here to educate you. Just understand the concept. If you like it, if you love it, please let us know. Please come to our stall and give the details, and we will design the plans for you. If you like it, you can actually go for it. Thank you again for Nagarajanya for giving me this opportunity, and hands down, you can buy all your real estates from Nagarajanya. He's one guy who knows.